This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
This lecture is on chapter 14 of the paper F5 lecture notes, which is more variance analysis, or perhaps a better word would be advanced variance analysis. I hope you've checked the previous chapter that you're happy with basic paper F2 variances, but in paper F5 you'll never be asked a whole paper F2 variance analysis question. Little bits of it can be asked as a little bit of a question, and the understanding of variance analysis matters for the variances that are coming, but it's the variances in this chapter that are important for paper F5. And there are several. As we go through, there's something called planning and operational variances, there's something called mixing yield variances, and then a couple of other slightly smaller ones. So I will go through them, but they are rather separate, so we'll keep them as separate lectures. But the first one I want to look at is planning and operational. And to explain what they are and how we deal with it, can you look at, first of all, example 1, and we'll use that to sort it out. Example 1, it's what you might call an extract. It's only looking at materials, but in the exam it will only be this sort of exercise. It says in the original budget, the standard cost of materials, it was 10 kilos at $5 per kilo, and we budgeted on producing 10,000 units. So that's the original budget, but the actual results, we actually produced 11,000 units, and the materials, we actually used 108,900 kilos at $4.75. Now ignore the next line for the moment, but the question wants to know the expenditure and usage variances. And so before we think about what planning and operational means, let's calculate the variances in the normal way. And so first of all, the expenditure, or the price variance. What do we do? Now this is back to paper F2. The expenditure variance, we take the actual purchases, which were how many? We actually bought 108,900. And we compare the actual cost with the standard cost. So the actual purchases at actual cost, where are we? We paid $4.75 a kilo. And so the actual cost, 108,900 at $4.75, is 517,275. And we compare with actual purchases at standard cost. We actually bought 108,900. The standard cost was $5 a kilo. A total of 108,900 times 5. 544,500. And so the variance, the difference is 27,225. And is it favourable or adverse? We paid less than we were expecting to. It's a favourable variance. So nothing new there. That's exactly paper F2 variances. What about the usage variance? For the usage variance, we take the actual usage in, what have we here, kilos. So in kilos, we actually used 108,900. And remember, no point in comparing with the budget because we produced more. We compare with the standard usage for the actual production. So we produced 11,000 units. From the original cost card, it should have been 10 kilos a unit. So we should have used 110,000. We used less, and the variance in kilos is 1,100. And we cost it out, do we not, at standard cost. And the standard cost per kilo was $5. Again, favourable or adverse, or we used less material than we were expecting to, and so it's a favourable variance. Now then, that again was gentle revision of paper F2 variances. At F2, that was the end of the story. But of course, why are those variances occurring? And, I chatted in the previous lecture about different reasons that could have accounted for the variance. Favourable or adverse, we want to know, what's gone wrong or what's gone good, sort of thing. But it boils down to really two separate issues. It could either have happened because the manager responsible for using material or for buying material has done a good or a bad job. Here, they seem to have done a good job, the variances are favourable. Or it could have been nothing to do with the manager directly. Maybe we made a favourable price variance, not because the manager was doing well, but simply because prices went down, therefore we automatically make a favourable variance without having to do any work. Or it could have been a deliberate decision that we deliberately bought cheaper material to save money and took the risk that some other variance, not here obviously, but cheaper material could have meant we used more, but it could have been a deliberate decision. And what planning and operational variances do is try and separate the two. How much of that expenditure variance is due to what you might call permanent changes? The price went down and it's going to stay down, or we're deliberately buying cheaper material, but permanent changes. And how much is due to the fact that the manager is doing a good job or a bad job? And look at that extra line in that question. If you go back to the question, it says, since preparation of the budget, the price per kilo has changed to $4.85. When we budgeted, we thought it would cost $5. It turns out that prices have gone down, or we made a mistake. The price is $4.85. And so surely the manager should be paying $4.85. Don't care what was in the original budget. If he's paying more than $4.85, something's going wrong. If he's paying less than $4.85, he's doing well. But that's, if you like, the new target. And similarly here, the usage, although we originally budgeted on 10 kilos a unit, it turns out that the usage is changing to 9.5 kilos a unit. Again, maybe we made a mistake when we did the original budget, and it should always have been 9.5. Or maybe we've changed our production practices. We've permanently changed how we produce. This isn't just an accident that 1 month we use more or we use less. But in future, for whatever reason, we intend to use 9.5 kilos. And so again, when you're measuring how well the manager's done, the manager responsible for using material, since it turns out he should be using 9.5 kilos, we should be comparing with that. And so what we're going to do is more analysis. We know the expenditure variance. Overall, we have saved 27,000 as against the original budget. But how much of that is because the price had changed. And how much of it is because the manager didn't hit or beat the new target. And we look at the two separately. So expenditure variance, first of all. We've already worked out the total variance, so we'll wind back, we'll check back later. But we worked out the overall variance. We paid $4.75, it should have been $5, we saved 25 a unit. But let's now try and analyse that. First of all, into the planning variance. And the planning variance is looking at what you might call permanent changes. And we take the same approach as we did before working out the expenditure variance, except this time we're going to say, oh, right, the original budget said $5 per kilo. The price has changed to $4.85 a kilo. And so that revised figure of $4.85, we'll compare that with the $5 and see how much it affects us. Have we saved? Have we paid more? So just like before, we take the actual usage, but this time we'll compare what we call the revised standard price with actual usage at the original standard cost. So exactly the same approach as before for the same reasons. But for the minute, forget what actually happened. We kept comparing this revised price with the original. So what was the usage? It was 108,900 kilos. At this new standard cost of $4.85, we would have expected to spend $528,165, whereas at the original standard cost, we expected at $5 to have paid $544,500, and therefore the planning expenditure variance is the difference of 16,335. A favourable adverse, well, the revised figure turns out it's lower than the original, so it's favourable. So we've saved 16,000 as a result of either the price went down or we changed our plans, we bought different material. But that's separate from has the manager performed well. So that's what we should have spent at $4.85. Well, now let's check on the manager. The manager responsible should have been paying $4.85. Have they paid more? Have they paid less? The operational variance. So this is measuring the operations, the way the managers operated. And again, we work it out in exactly the normal way. But instead of comparing the actual cost with the original standard cost, we'll compare it with this new one. So it's the actual usage at actual cost. I know we had it before, but I'm not going to bother winding back. The actual cost was $4.75. Did I use it? Yeah. Which is $517,275. How much should we have, or should he or her have paid? Actual usage at this new, at the revised standard cost. 108,900, actual usage. Original standard cost is now irrelevant. He should have been paying this revised cost of 485, and so we would have expected him to have paid. £528,165. And so the difference, the variance, 10,890. Favourable, adverse. Well, it's favourable. He did do well. And of course, it should check. The planning was 16,335 favourable. The operational, 10,890 favourable. The two together, 27,225. Was that what we had originally? Yes, it was. So all we've done is analyse it. 16,335 of the variance was due to, or for whatever reason, our plans having changed. We should be buying materials at a different price than we originally budgeted. Operational variance is measuring how well the manager achieved the revised plans. I'll say a bit more about how we interpret them later. For the minute, it's just the arithmetic. But there we are. There's the expenditure. Incidentally, perhaps I should have said earlier, I'm writing it out in full to hopefully make it clear. It should be pretty obvious, to be honest, that there are ways you can save time. For instance, instead of costing those two in full, the difference is 10 cents per kilo. So I could have just put 108,900 at 10 cents, 10,890. You know, so, I mean, it's up to you to obviously practice and speed up and whatever. Make sure in section C, the long questions, that you're showing enough workings in one way or another, that it's clear you know what you're doing. Don't just write the answer down. But how you get to the answer doesn't matter, as long as it's right. Anyway, we've analysed the expenditure variance. What about the usage variance? What did we do before? Without me winding back, we compared actual usage with the original standard usage. But again, although we originally budgeted on 10 kilos a unit, for some reason it's changed to 9.5. So we had to separate the two. The planning variance, we'll do it in exactly the normal way, but we're comparing the new standard cost, the 9.5 kilos, the revised standard cost, with the original standard cost. So what did we do? We looked at the kilos, did we not? And the kilos, we'll compare revised with standard, so we'll take the revised usage for the actual production. How many do we produce? 11,000 units. The revised usage, we should be using now 9.5 kilos a unit. So 11,000 at 9.5. 104,500. Compare it with the original standard usage. So the original standard usage for the actual production. Again, we produced 11,000. We should have been using, or we thought we should have been using originally 10 kilos a unit. So 110,000. 11,000 at 10, 110, yeah. And therefore, 5,500. 11,000 at 9.5, 11,000 at 10. Yeah, 5,500. That's kilos, but cost it out at the standard cost of $10. 55,000. Sorry, the standard cost was $5. Sorry. Favourable adverse. Yeah, the revised was less than we originally were budgeting on, so it's favourable. But that's the planning variance. You know, we've changed the way we're using the material. We originally expected 10 kilos a unit. Fine, we now only expect 9.5 kilos a unit. That's what we should be achieving. Again, by all means, take shortcuts rather than write it out in full. It's 11,000 kilos. The saving is half a kilo per unit. So 5,500 cost out at standard. Finally, what about the operational variance? We're saying now the manager should be using 9.5 kilos. Let's check, did he actually use more or actually use less? So same basic rule, compare the actual usage, which in kilos is 108,900. But instead of comparing now with the original standard usage, we compare with the revised standard usage. As always for the actual production. So we produced 11,000. The revised standard usage, we should have been using 9.5 kilos per unit. So we're now expecting to use 104,500. And in fact, the managers now used more than we would have expected. What's the difference? 4,400 kilos. Cost out at the standard cost. The original standard cost was $5. 22,000. And as I said a moment ago, having revised the usage, knowing that we should be using 9.5, here, for some reason we've used more. It's adverse operational. Does it check that we've decided that planning was 27,500 favourable, operational 22,000 adverse, and so the total 5,500 favourable. Is that what we got before? Yes, 5,500 can show it all favourable. So all we've done is analyse it into those two bits. So I don't think that's too bad. I've said enough about, you know, saving time, shortcuts. You don't need to write it all out in full, as long as it's clear from your workings what you're trying to do. Because any of us can make silly mistakes, clearly. If it's just a silly mistake, you lose very few marks, as long as they're clear you were trying to do it the right way. A few things, though, before I leave that. One, I think I did say before, is that you're only asked in the exam planning and operational on a specific cost. You wouldn't be doing a whole statement of all the variances. In real life, maybe, but not here. So it could be a question just asking you to do it on materials, as that one. Or it could be one asking you just to do it on labour, which is the next one we'll talk about in a second, but it uses exactly the same logic. Secondly, now what I'm about to say is terribly important, as it could affect you depending what books, what revision kits you might be using. There are actually two ways of doing planning and operational. They both have a logic, but they give different answers. Now, to show two ways here would be ridiculous, it's confusing. They give different answers. There is a logic to the two different ways. The previous examiner preferred to do it another way and got different answers. The way I've done it is the way the current examiner prefers, and is certainly the easier way. Having said that, because there are these arguments, the wrong word, some people prefer one way, some people prefer another, so the examiner will always accept the answer done either of the two ways. But clearly it's ridiculous to learn two ways. The way I've done it there, I say again, is the way your examiner prefers it. And more importantly, it's by far the easier way. But I'm going on about this because if you're using old books, you may find old books do it the way the previous examiner preferred, and they will end up with different answers. Now, I know that's confusing, but that's why really you should be using current editions of revision kits or study texts if you're using study texts. But that is the best way to learn, certainly the easiest. Finally, as far as the interpretation of it's concerned, a lot of it's down to reading the question, looking at what information, why, for instance, did the usage fall to 9.5 kilos? But operational variances we interpret in the normal way. It's basically, is the manager doing a good job or a bad job? I'm not going to repeat everything that I said in the paper F2 variances, because it's the same thing. Here it's adverse. On the face of it, the manager's doing a bad job, but we'd need the manager to explain what had gone wrong. And if possible, we want to try and correct it. Planning variances, on the other hand, are because we changed our plans. Again, we'll want to investigate. It could simply be, for the price one, certainly, it could certainly just have been the price went down. So it wasn't anything due to the manager, the price went down, great, if we save money. And for the usage one, we'd need to investigate again, why had the usage changed? Why did we budget on 10 kilos and then change it to 9.5? Presumably, it was a deliberate decision to change our method of production. And of course, because it's favourable, that's great. But we then have to say to ourselves, well, why did we change it? Why were we originally using so much when we could have used less? Well, perhaps by using less material, we thought, well, we'll use less to save money. We might say, well, we're using less material, so the product might not be as good, but we think we'll save more money using less material than the amount we'll lose by losing a few sales. So we would need to look at why we were using less, what other effects there might have been. On its own, obviously, it saved money and it's great, that's in terms of the usage. But we would need to think about, has it lost us money elsewhere because the product's not as good, or whatever. But that's reading the question. And finding out what they tell us about why we changed the standards, why we changed the usage to 9.5, why the price changed to 4.85. So have a look back at that. I hope that makes sense. Example 2. Well, what I'm going to do, I've talked long enough on this one, so I'll stop this lecture. The next lecture, there's not much for me to say. I'll go straight through example 2. But because it's exactly the same approach, I do suggest you have a go at example 2 yourself first, and then come back to the lecture and check that obviously you got the same.